What's up, everyone? It's Scotty with MoneyVest. So let's talk about Enphase stock here, sparking a huge rally of over 16% yesterday on the back of very, very strong inflation numbers, which suggested that there is inflation coming down. In other words, there is a possibility finally for a potential for soft landing. And on the back of those inflation numbers, we also did see interest rates, in other words, the yields, dropping back lower as well. And also the market's expectations of interest rates getting cut in 2024 increases to 4 cuts and also starting 1 month earlier in May. So we're going to talk about all of that and also go over Enphase's technicals and talk a little bit about the fundamentals of this company. And I'm also going to go over a very, very important lesson when it comes to investing and trading, when it comes to price action as well. So hope you all enjoy this video and find it helpful. If you do, make sure that you drop a like. I would really appreciate it. Subscribe to the channel if you haven't already. Link to our Discord and Patreon is going to be down below. Again, you can access all the MoneyVest benefits, including our Discord, over 20 plus channels, including trade alerts and options alerts, trade ideas. Everything's going to be included, as well as all the Excel spreadsheets, including intrinsic values. We've got our debt retirement calculators, we've got volatility spreadsheets, S&P 500 valuations, and not to mention a lot of private videos and members only videos that are ad-free content that you can access as well. There is a 16% annual discount with 2 more spots left for the month of November, with the link down below if you want to join. Of course, be a part of our MoneyVest community. Now, this right here was the S&P 500's biggest gainers and losers. Enphase at the top of the list at over 16% move to the upside. A very, very strong move. And of course, we did have a lot of other solar and renewable energy stocks like First Solar, Solar Edge pushing up double digits, 10.5%, close to 11% as well, on the back of, like I said, very, very good inflation numbers coming out. Now, this, I think, is going to be very, very important, a key lesson to take away when it comes to just investing and trading. And look, there is a difference when it comes to market participation, right? And no two portfolios are ever going to be the same because everyone's working with different time horizons and financial objectives and risk tolerances. I mean, there's just so many variables at play here that everyone is going to participate in the markets differently. But what I want you to do is ask yourself, whenever you make a purchase, whenever you actually buy a stock, I want you to ask yourself the simple question: are you investing in this company or are you trading this stock? Because there's a big, big difference, right? Investing, in my opinion at least, price action in the short term is irrelevant, right? It doesn't really matter where the price goes in the short term if your time horizon is, let's say, 3 years, 5 years, 10 years from now. And that's exactly the whole idea behind, let's say that I'm dollar cost averaging into VUG or SMH or any of the other ETFs or broad-based diversified ETFs or index funds or even individual stocks. If I'm investing in them for, let's say, 3 years, 5 years, 10 years out, what happens in the short term is quite irrelevant. What really matters at the end of the day is the fundamentals of the business. That's it. That's all that matters. The underlying company, underlying business, how is that doing? When you are trading, on the other hand, and your time horizons, let's say a few days or a few weeks or a few months, then of course price action is everything, right? I mean, the momentum, the trend, the sentiment, that's your friend, right? In technical analysis and trading, we say that the trend is your friend for a reason, because the short-term price action is what dictates where the price actually ends up going, right? It doesn't really matter what the fundamentals look like, maybe to some extent, right? So that fundamentals are irrelevant when it comes to trading is not completely accurate, but of course there's a more weight given to the price action, the sentiment, the overall trend, and the technicals when you are trading, as opposed to when someone's investing in a company, which very much has to do with understanding of the fundamentals and the business as well. And that's exactly, I think Enphase kind of fits really well in sort of like that idea, because ever since this sell-off has begun, and of course we've been talking about this company for quite some time, there's been some sort of questions around whether Enphase is even worth the potential in the future, and if there's any type of growth in the company that there's going to be there. And the price action can do that, right? The price action has been so weak. It's been very much to the downside, and it's just been selling off. And look, it was overvalued here in the $300 plus range, but I can tell you that it's certainly looks undervalued in the $70 to $80 range, right? So the markets will overshoot both on the upside and on the downside. And that's really how price action works. But at the end of the day, what we need to understand and analyze is how well is the company doing. That's it. How well is the business? And are there any changes to the business? And that's what Peter Lynch also talks about, is like recheck the story every few months, every single quarter, to better understand if the thesis is still concrete, if it's still aligned. If the answer is no, that's when we cut our losses and then we move on. But if that's still intact, price action is irrelevant. Doesn't really matter what the stock price is doing as long as the business fundamentals continue to improve and continue to be better. So this right here is the growth expectations for Enphase, right? So right now trading at a forward price earnings multiple of 20. We've done the analysis. It's been around 19 to 20 times, and that's come down significantly from highs of well over 40 to 60. And moving forward, the growth expectations are once again in the sort of a 10 to 12%, maybe even 14 to 16%. Now, the interesting thing is that these have been cut down significantly because of the higher interest rates. And that was actually one of the reasons why Enphase did rally the way it did, because 10-year treasuries were down significantly yesterday. So they were selling off a little bit over 4%, which obviously did spark this huge rally in risk-on assets and technology and innovation stocks. So we did have Tesla up over 6%, right? AMD, Nvidia pushing higher. A lot of other Upstart, for example. We got Peloton, Fubo TV, a lot of those stocks pushing up pretty dramatically double digits. So it was a very, very strong green day. But that's also the whole idea, right? So the entire thesis kind of built around the macro play, which is interest rates. And if they continue to slide lower, then it's going to create an environment which is beneficial to a lot of discretionary companies, including the likes of Tesla and Enphase and Nvidia, and some of these companies that do depend very much on consumer spending and discretionary spending and financing some of those bigger purchases at lower interest rates as well. So that's where we are. And, like I said, in my opinion, I think the fundamentals are still pretty solid until the story changes and until we actually start to see a significant decline in, let's say, revenues, and they are moving in the opposite direction. They're not growing anymore, or the profitability is struggling with the margins. Right now, again, very strong at over 45%. And that's another thing, right? Enphase has been able to maintain its margins really well because of that premium positioning in the market, right? They are a pretty dominant player when it comes to microinverters and solar systems. And for that very reason, the margins have only expanded for the company even this year, right? On the first 9-month basis, we've seen growth in revenue, we've seen growth in profitability, we've seen growth in operating leverage and margins as well. And the valuation, the best thing is the valuations come down significantly while also maintaining its balance sheet with significant amount of cash with little to no debt. And I think with every stock, every company investment, I think the first analysis should be on the balance sheet. Like, that literally should be the first starting point, because if the company's got a fantastic balance sheet with very strong current ratio, quick ratio, low debt to free cash flow, low net debt to EBITDA, very strong cash to debt, very strong current ratio, very strong total assets over total liabilities, that in itself makes the company very attractive from a fundamental standpoint, because it's got a very, very good, well-capitalized business that can be sustainable for a very long time. And then, of course, we move on to profitability and growth and valuation. But I think the first starting point should be the financial health of the business, because when things get tough like they are today, can the company survive those times? And Enphase, given its capitalization, given the amount of cash it has on the balance sheet with less debt than cash, can survive these downturns for some time. And of course, eventually when things get better, as interest rates come down, or we do see interest rates getting cut on the back of lower inflation, that's going to create, of course, a lot of demand in 2024, which could once again spark that rally in these companies. Like yesterday was just kind of like this little taste, right? So you basically, we just got like a little taste of what it could look like when interest rates do start getting cut. So this right here is the market's expectation now. So 1, 2, 3, 4 rate cuts is what the market's pricing in going into 2024. And that, again, has dramatically shifted from a few months ago. Earlier, it was 2 rate cuts, and we were also expected to start in June or July. Now we're expected to start rate cuts in May and see as much as 4 rate cuts. UBS even posted a report yesterday suggesting 11 rate cuts from the Federal Reserve, which obviously is going to be an insane number if that actually ends up happening as well. So that's where we are. Now, when it comes to technical analysis, we're kind of filling the entire gap here, up another 1.7% pre-market, so back up to almost $93. We're coming up to this resistance. We're actually breaking out above this resistance pre-market right now. So we'll go ahead and turn this level into a new support. We'll see if that level continues to hold up after the market's open at $91, $92, and the next target's going to be back over $100. And this right here is the massive gap that Enphase still needs to fill, which obviously left after the SolarEdge earnings, after the company's earnings, their own company earnings. And this right here is the gap that it's now left on the downside. So it's literally just been gap down, gap up for Enphase at the moment. But let me know in the comments section down below, what do you think? We've got an oversold RSI and MACD, which is now starting to rotate back higher. So it's not a surprise that we're seeing a lot of momentum back to the upside, and next target and resistance is going to be at $108, $109 for Enphase. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Discord and Patreon links going to be down below. 20 plus Discord channels, including trade alerts, trade ideas, options alerts, everything's going to be included, as well as Excel spreadsheets and members only private videos. All of that available with the link down below. 16% annual discount available till the end of this month. As always, happy investing, and I will see you all in the next video.